Hello everyone, welcome to Bytes special video on budget 2024. I am Nikhil. In today's market update, we have seen the budget was released by the central government, and in the budget, the finance minister announced that the several updates on the tax receipts, and they're expecting the tax receipts for the financial year 2025 at 26 lakh crores, that is 26 trillion, and the net borrowing from the market is expected to be 14.13 trillion. And the net borrowing will be 11.75 trillion, which is lower than compared to the last fiscal year. Also, they have said for the current fiscal year, the fiscal deficit will be at 5.8%. And for the next fiscal year, that is FY25, they're expecting the fiscal deficit to be at 5.1%. And they're close to achieving their 4.5% fiscal deficit target in FY26. So along with that, the market reacted very positively, the bond market, and where we are seeing that the longer tenure of the Gsec rallying much sharper, and where the 2037, 2053 bonds, which are the 14-year and 50 and 30-year bonds, are seen rallying as much as close to 1 rupee in price terms, and as well as in the basis terms, they rallied as much as at 10 basis compared to the yesterday's closing. Currently, the 10-year is traded at 7.06% compared to yesterday's closing of 7.17%, and the 5-year is traded at 6.99%. And also on the equity front, there is not much of a cheer factor for the investors, and which is clearly seen in the Nifty traded on a flat note, and USD INR also traded on a flattish note. So on the global front, yesterday, the US Federal Reserve said that they're going to maintain the status quo on the interest rates. And they said that they're going to see the inflation sticking to the 2% target for a good 6 months time frame. And then they'll take a call on the rate cuts. So on the contra side, where the market is expecting a rate cut in the very next month. So clearly, as per the Fed chair speech, it doesn't look like the rate cuts going to come anytime soon, and likely to come in maybe in the May meeting, policy meeting. So similarly, from this, we can draw the lines to the current domestic central bank policy as well, which is due this month, where we can see RBI holding to the status quo the rates, and as well as we can expect the rate hikes maybe in the second half of the calendar year. And if you're thinking how to buy Gsec, the best place for you to hop on is the INR bonds platform, and you can download the app, which is available on both Play Store and App Store. And there is a Gsec tab on the app where you can go there and check the rates and invest into the Gsecs. And also remember, investment in debt securities, municipal debt securities, and securitized debt instruments are subject to risk, including delay or default in payments. Read all the offer documents carefully. Thank you for listening in, and do subscribe to our YouTube channel if you have not done so. Thank you.